Did you get caught in yesterday's price action on Nasdaq and ended up in losses? In this quick daily review, I'm going to show you two simple concepts that could have helped you avoid those losses entirely. Stick with me and I'll break down exactly how you can use these strategies to stay on the right side of the market. But before we go into the market review, I want to congratulate the traders that got funded and some of them also got payouts. Okay, so congratulations to XDemon TV for securing his third TopStep account. Congratulations to Nix for securing his first ever futures account. Congratulations to Valentin. He got his 150k account. Okay, so he's only trading the moneymaker setups. Okay, and also congratulations to Dister. So he got funded in the shadows and he was only trading glitches and money makers, and now he got $1,000 payout. Okay, so congratulations to Nazim. So he secured his My Funded Futures account, and also congratulations to Iris Gam for securing his TopStep funding. Okay, before we dive in, I want to remind you that everything I do here is completely free. No hidden charges, no paid services. Our Discord community, which is also free, is growing strong with over 2,000 members, all filled with positive energy and a genuine desire to help each other succeed. If you are not already part of it, make sure to join us and become part of this amazing community. The link is in the pinned comment below. Okay, so quick review for what happened yesterday in Nasdaq. So after London Open, we had this bullish zone. It gave the 1-to-1 and also the Moneymaker Pro Max for a 1.5 R. I think it was a 1.5 R trade. Okay, yes. Okay, so after we got this zone, okay, price kept displacing above the zone, right, creating also a small valid zone in here. Okay, so price accumulated above, came back. Okay, so they failed to check the 50% and they gave the 1-to-1. So knowing that we have a huge unmitigated zone under, higher time frame zone also, so you should have deleted the limits after this happened, and instead of trying to take bullish setups, you could have tracked or took bearish setups. Okay, so this was a golden bullet short. Okay, and here they gave the 1-to-1 also for this bearish zone, right? So this was a risky short. Why? Because we touched exactly the 50% of this higher time frame bullish zone. Okay, but we also closed above this SNDR that was responsible of us touching the 50%. So this is a small, very small bullish flip. So they closed above, mitigated the 50%, took the range liquidity. You could have taken a precise entry here like that and target the week high. So this is some crazy liquidity trading. Okay, some models I will teach you guys later. Okay, but you could have just took the Moneymaker Pro Max from this 50% and targeted this week high for a 4-hour trade. Okay, now after we closed above this high, we have now a higher time frame zone. Okay, maybe 5-minute zone. Let's see how it looks in 5 minutes. Yes, exactly. So we failed to mitigate the 50% of the zone and we accumulated above, right? Now we just touched the 50% and gave the 1-to-1. Okay, but the problem here is that we took a higher time frame high. Okay, so price will either accumulate and manipulate to break structure more up and then we follow structure, or it manipulates and then changes the order flow to go mitigate something in this higher time frame zone. It was also a 15-minute zone. Okay, so this was a small close, making this a valid zone. Okay, so also we had this glitch zone. Okay, so price reached back into it. Okay, so being here, right, always zoom out and see if we took a higher time frame high, and that's how you could have avoided all of this mess. Okay, now I also gave you another rule, a time rule. If you respected it, you could have avoided all the losses in here, which is you never trade before 11 a.m. Okay, for me, not only I don't trade before 11 a.m., but I also never trust zones that are made before 11 a.m., especially in days like this when we have FOMC the next day. Okay, so this was a zone we created after 11 a.m. Price never came back to it. Okay, and then we created another bearish zone. Okay, now this bearish zone was beautiful. Why? Because on M3 and on M5 we closed under the bullish or the SNDR that was made on the M5. Okay, making this higher probability. Okay, now what was beautiful about the zone is that you could have taken all the models we teach. Okay, so the money maker, it gave the 1-to-1. Okay, the money maker Pro Max targeting the week low. Okay, it gave a 2.5 R. All right, so also what was beautiful about this zone, it has also a glitch zone, right? So also an unmitigated portion of a fair value gap, indicating that this breaker liquidity, we will take it and then we can come back down. Okay, so knowing that we closed on M5, right, so we are maybe still bearish. Okay, it was also risky. Why? Because we were in this deep discount considering this range now, because not only we mitigated the 50%, but we also were going down. Okay, but if you look carefully on the M5, right, so we had this glitch. Okay, so this was the glitch, this zone was the glitch on M5. Wait, right, so this was the glitch, and what was beautiful about this glitch is it had this unmitigated zone within the zone. Okay, so price never touched this zone. Okay, so we can still trust shorts in here. They are risky. Okay, you could have taken only the glitch setup for high probability, right? So that's a 1-to-1 for the glitch, but also a 4.6 R trade for the glitch Pro Max. Okay, now cool, we mitigated the 50% of that unmitigated 5-minute zone, right? But coming back to the M5, this actually never closed under this, right? So this M1 zone was not a good idea to short. Okay, so number one, this is a V-shaped recovery. I never trust V-shaped recoveries, but I like for price to create liquidity here, accumulate, take stops, then mitigate the 50%. Then we will take all of this liquidity left. That price will leave as a trend line liquidity or something like that. And I can trust taking the 1-to-1 here. Okay, but going back to the zone, which was a huge zone, going back to it, right? Going back to it in a V shape makes me never trust that zone, right? But this zone had a glitch zone. This was a small time frame glitch zone, okay? And it gave the 1-to-1 in one candle in here, okay? Also, in M1, we had this glitch zone, right? So in M1, we had this accumulation that price took with this stop hunt leg, and then price broke under. We never mitigated back, nothing in here. So we can take the 1-to-1 of this glitch, right? Also, how you can get more RR. So this leg here, the glitch leg, okay? Instead of taking the 1-to-1 from the 50% blindly, just look at some high that we can take, right? Especially if it had, or if it has an unmitigated fair value gap above. And instead of entering at the 50%, just enter above that high, okay? And target the 1-to-1. And now you have a 2.2 trade instead of a 1-to-1 trade, okay? So this is how you see me guys have special or high RR trades. I sometimes mix my liquidity knowledge to trade with the moneymaker or the glitch setup, okay? Now, this was the last setup I saw for the day. We kept manipulating or accumulating in here, okay? So nothing special happened after, okay? So that's the end of today's quick review. I hope you guys like it. I hope you guys traded safe yesterday. And I want you guys all to stay safe also today, FOMC day. And remember, capital preservation is still a W in our books, okay? If you found this video helpful, make sure to give it a thumbs up and hit that subscribe button so you don't miss out on any futures update. And if you want to dive deeper into the moneymaker setup, check out the playlist that will pop up in the end screen. It's packed with everything you need to get started. Remember, everything I do is free, including our thriving Discord community. Join us and let's keep growing together. Ciao, ciao.